And the decision by the Central Bank of Nigeria to restrict individuals and local firms from investing in its open market operations, or OMO, auctions has narrowed investment choices for pension fund administrators and fund managers in the country to treasury bills and stocks. Now, the PFAs hold a significant amount of government securities in their portfolio as required by law, which also include OMO bills because of its attractive rates. Unfortunately, the uninspiring performance of the Nigerian Stock Exchange, another investment window, further compounds the woes of the PFAs and fund managers. Now, the NSE All Share Index has depreciated year to date by 16.17%. Joining me in the studio to discuss this development is partner CARDINALSTONE Partners, Mohammed Garuba. It's good to have you.
Thank you very much.
All right. Like you've heard, Nigeria's stock market is down by 16% year to date, and equities have remained largely unattractive. So what should the authorities do to improve liquidity and restore investment confidence there?
I think right now things are gradually getting better. The recent move by the central bank to limit investments in OMO would make local corporates start looking at other investment opportunities. Yields, prices are down, like you've rightly pointed out. The index is the benchmark for the stock market.
Indeed.
And since prices are down now, yields are getting very attractive. That's the dividend yields in this case. So we might see quite a lot of switching of portfolios. Right now, PFAs have trillions under management, but roughly about 4.3% of that is in equities.
All right.
We might see a slight bump in that.
I'm sorry, when you say under management, can you enlighten us on that?
So total investments, including bonds, treasury bills, as well as equities. The equity portion of the portfolio, it's pretty thin. It's the smallest composition right now. Ideally, pension funds are long-term investors. So we might gradually see that switch. They've not been very comfortable, but since yields, money market yields were very attractive, there wasn't any need for pension funds to actually source alternatives. But right now, with what's happening in the market, we would gradually see fund managers looking for alternatives. Pension funds make up the largest investable market.
Yeah. All right, very good. Now, in view of this scenario, will this be sufficient, or do you think the CBN should come out with new guidelines to enable banks resume margin lending at this rate?
Yes, I think it's time for margin because there's no liquidity in the market. Typically, a market is made up of three core investors. They're international investors, they're local corporates, and that's the fund managers, as well as retail investors. The retail market is pretty thin right now because there's no margin lending. Margin lending, especially about a decade ago, drove the market. It's very key. It's an integral part of trading. And so I think it's time for us to introduce some of all these liquidity tools to the market.
Indeed. Still talking about specifics, CBN's decision to allow only foreign investors participate in OMO auctions. So don't you think that's a little bit discriminatory here?
Clearly it is. I mean, it was a shock for the market. Market is still trying to digest it. The market has been literally liquid for the last 2 trading days right now. That's Friday and Monday. Even today, again, the market is open pretty liquid. Traders are trying to digest this information. And I believe the central bank would have to act. This is completely abnormal. Even the internationals that are being protected too are worried because for them, liquidity is important. You can't have a market without liquidity. And so I believe the only thing right now left for the CBN is most likely to come and also trade. They need to come and create liquidity. Without that, I mean, the market will freeze.
All right. In view of this, earlier on, you alluded to the fact that pension managers will also have a say in this regard. But what are the prospects of them reallocating their assets to the stock market on account of this current development by CBN?
There are quite a lot of factors, and that's from things like governance to liquidity. But as these funds start to grow, the Nigerian treasury bill market is not that deep. So the OMO is much bigger. Between now and December, we have roughly about less than 500 billion of maturities in the treasury bill, in the Nigerian treasury bill market, whereas in the OMO market is not of 4 trillion. So if most of those monies, as they mature, come out, pension funds will be under tremendous pressure to reinvest most of this. And so we see it's going to be a gradual natural flow into the equities market to reprice the market. The non-existent of foreign investors, retail, as well as the pension funds not playing their role has led to the market being very quiet. So we see PFAs who, to a large extent, well, not just PFAs, insurance companies, and to a large extent, local fund managers gradually go back into, because this is affecting all classes of local corporates, gradually go back into the stock market. And we'll see a repricing. It's going to be slow, but yes, because everyone wants to buy cheap. That's a natural fit. Yeah.
Indeed, a chain reaction there. So still talking about, in terms of the impact this will have on, stakeholders, there's been concerns that the OMO restriction could also lead to an increase in dollar demand pressure on the FX market and reduce liquidity in that segment. So what do you make of that prospect?
Especially for, I would call HNIs, high net worth individuals, as well as local corporates who typically adopt tactical asset allocation. They take their investment decisions on their own. PFAs, to a large extent, are regulated, so we would not see that flow coming into the FX market. But a lot of individuals who take decisions on their own would gradually, so all that pressure would hit the FX market. So would clearly see some pressure. And I believe the central bank would have to come out with measures to be able to manage that.
Yeah, just a one-off question here. What will now be the role of deposit money banks on OMO bills upon this CBN restriction? They're the channel of, getting this to the people and corporate organizations as well.
Correct. Right now, OMO typically is supposed to be a liquidity management tool, but I think CBN is looking at it more as a financial stability tool by including foreign investors. Now, the confusion there is the banks do not hold majority. The banks hold roughly about 30 to 35% of OMO bills. Internationals actually hold majority. And so the banks on their own cannot create the immediate liquidity. Yeah, so there's clearly confusion. Everyone is still trying to interpret the impact of this new guidelines.
Indeed. Now, let's talk about other issues now. One that's been in the front burner for some time now, the border closure, as it were. So is this not having impact on trade and businesses? What do you make of it?
To be honest, there are two sides to this. There's the... while quite a lot of people are happy, like the rice farmers, I mean, about 2 weeks ago, you had Dangote actually commending the whole move because, it's going to affect sugar prices. So commodities, to a large extent, while it's affecting, on one hand, you saw the CBN also hailing the move because, first of all, it's going to reduce FX. But the economists, too, most of the economists have a strong view that our GDP, the underground market, was way bigger than the formal market. So while you have the NAFEX market, for example, tracking FX traded, you had these huge West African border markets. FX trades were going on, uncaptured in GDP computation. So if you're having GDP impact in most of all these countries, as we're hearing, you might gradually see a bump in our GDP just by this move alone, because all that was naturally uncaptured.
A bump for the positive?
For the positive. A bump for the positive. All this huge market, everyone is shocked at the impact from oil prices. So there's a lot going on. And until we get the right data, we would not be able to really estimate what the impact is. But there's a lot. So different schools of thought. While it's huge disadvantages for a lot of people, but I think the advantages to a large extent outweigh the disadvantages. And that's primarily because we don't have the right data. And without data, you really can't take right decisions.
All right. I hope you can do this in 40 seconds. An impact on business to finance the loans from banks. How is this border closure having, on it?
Fantastic move, really. I mean, so to a large extent, most of this, it's going to materially improve the performance of interest rates are going to drop because there's more trades to happen. A lot of people are seeing a brighter outlook, especially those who were well-structured businesses. And once cash flows are going to improve, banks are able to lend properly.
All right. On that note, Mohammed Garuba, CARDINALSTONE Partners, I'd like to thank you very much for your thoughts on those issues. Good to have you.
Thank you very much.
All right.